evening, good morning, good afternoon, good evening. I have no idea what time you're watching this. Same intro every weekend. This is 4:21 in the afternoon over on the East Coast, Sunday, May 18th. It's 4:21 in the morning, Monday, May 19th over where I am, and I greet you not with a lowered tone because of the things that are taking place over here, but only because there are a plethora of family that have all arrived for the event. And everybody's asleep because it's 4 o'clock in the morning, so I will do everything in my power to not raise my voice during the course of this videotaping. So here we are. What I have for you on the screen here, I've shared with many of you over the past years, is a financial, not really a financial forecast, but it is a financial forecast by a guy named Samuel Benner back in 1875, and he simply tracked out with his system, which you can look at, see it's very methodical, it's very mathematical, of periods of hard times, low prices, good times to buy stocks, corner lots, goods, etc., and hold until the boom reaches the years of good times and then unload it. This goes back to pre-depression, and when you go through this and you time it as to where everything has taken place, give it even the last, just your lifetime, the last 50 years, it's pretty fucking accurate. And here we are, like I've shared with many of you, we're coming into 2026. And you can find a number of these dates that are wrong, where you could have gotten in earlier, you could have stayed in longer. But it's just something there for a bit of respect, and that's all that it is there for, because again, what we do try and do is foretell the future, and as we have done since the Pope died, prior to the Pope dying actually, we've had 4 green weeks in a row now since the Pope passed away during the Good Friday weekend, Easter Sunday, and I was able to be very aggressive about heading up there into that 5750 area, and that 5750 area was glorified, perfect for our maximum upside view. And then this previous week during OPEX, Trump started the weekend out on Sunday with a China deal is here, which is complete and total bullshit no matter which way you go with it. Tariffs or no tariffs, it's absolute fluff. But we gapped above the 200-day moving average, gapped above that March high from way back on our bounce in March, and we made it up to 59.58, which again, during the course of the week, I made every effort I could to guide you into that risky cluster zone, which worked out well in the beginning of the week. And then on Friday there, we blew through it because couldn't get through that 59.06, which was your highs during there on Tuesday and Wednesday. Where we are, we'll start looking at where we are, because now year to date, like I shared, we broke above that year to date. We are green on the year. We've got 4 green weeks in a row. The same thing over here on the QQQ, but more significantly, we are up 23.24% from the April 7th bottom. Over on the spreads, nothing wrong with, how everything's working out. It's all working out perfectly fine. Nothing to be worried or complexed about. The only thing that sucks is we're getting a lowered VIX, which we had a fantastic time enjoying the VIX above 21, but that again is due to change here very shortly. Quickly, what I will bring you to before we get onto the charts, looking at the QQQ, again, 4 green weeks in a row since the Pope passed away, Good Friday weekend, with a big blow-off week this previous week here during OPEX, blowing off above that 500 level into that 521, 521, 521.93, 521.70, and it is up 29.71%. And we come on over to the IWM, who, again, IWM as well had a green week. I have not highlighted that one yet for myself, for my own viewing pleasure. But yes, we have 4 green weeks in a row over on the IWM. And last week was about as unfluffaluffagus as you could want, being up only 1 point on the week. So I tell you, I took a little bit of time and I read through 5 paid service emails. I read through 5 of them. The one that is consistently bullish started out his letter justifying why he has a bullish view, going off and saying there's a possibility I could be wrong and that it's this, but I don't agree because of this, and that. Everybody else is bearish as fuck. I'm talking, Blue Oyster fucking Club in Florida bearish. This has gotten a lot of people lined up, and I've been saying the same thing, that because you have had a 23.24% as of now bounce over on the SPX, a 29.71% bounce over on the QQQ. I got to be careful. I'm raising my voice a little bit. We are getting a dip. Whether you like it or not, we are getting a dip. And where that dip dips to is what will dictate where we are in terms of the Elliott wave, because this can go both ways.
Introducing the Enron Egg, the world's first micronuclear reactor for residential suburban use. This little device can power your entire home for up to 10 continuous years.
But I'll tell you this. The news that came out there on Friday after the market had closed. I mean, come on. Let's get real. Do you seriously think that this I'm sorry, this is the wrong one. This is the Fitch ratings. Moody's downgraded the S&P, downgraded the United States, not the S&P. Moody's downgraded the S&P. Where is it? I've got it here somewhere. Yeah, Donald Trump posted here. The guy who downgraded the U.S. credit rating at Moody's is a fool. Doesn't have a clue. Same thing like he was bashing Jerome Powell over the weekend, because this is the table. This is how they're setting the table up, is so that you have people to blame and Trump can continue to claim he's a winner, it's victory, because this is the Trump playbook, period, the end. That's the way that it works. And I'm not going out here and I'm bashing Trump. I'm telling you that you need to have an enemy. If you don't have an enemy, you can't be at war. So you make up these fictitious enemies, like here we said. Moody's is a fool that doesn't have a clue. Probably a retarded Democrat, too. By the way, this is Biden's credit rating downgrade, not Trump's. And this, he posted this himself, And you come over and you see, again, as if there wasn't already a, clue prior to the close that we ramped up all day on Friday, OPEX Friday. And SPY was down 1%. You go over onto the QQQ, and the QQQ was down 1.32%. Now, trading options doing credit spreads, we already know what minus 1% means, but we're not going to dig into that right now because, again, where we are, as far as from a chart point of view, which is where I want to start you with, basic, standard, RSI 14, daily chart, SPX, and as you can see here on Friday, we came up to 69.76. Fractionally the same as where we were back up here in December, where the QQQ made its all-time highs, QQQ made highs, IWM made highs, a lot of people made highs back here in December. We had that plus 10,000% zero DTE trade on the FOMC meeting, and then we chopped around and we went right into the anniversary, the 5-year anniversary of COVID, as to where we topped and put in our all-time highs over there on the SPX, 61.47.43. Our decline, again, bringing you back through the history, we spent a total of 23 minutes greater than minus 20% from that 61.47.43. And here we are. And you don't need to actually be a technician, chart technician, or anything like that to look at the chart pattern of this bounce and say, this is an impulsive bounce. This is a bearish bounce, and therefore a dip is due. However, bringing all of that into context as well, which I do not have up here, or do I? Yes. We had 3 red months in a row going into this month of May. Now, granted, February and April were fractional doji, but they were still red months. May, as I shared with Derek, going back and looking through some history, May has not been red but once over the past 10 years, and that was back in, I don't even remember, 2015, something like that. And you can go back even further. May simply just isn't traditionally a red month. So no matter what, we're getting a green month. There's no question about that. But again, when you come back onto the Fitch ratings, the Moody's ratings, this happened back in August 1, 2023, Tuesday. It's a Tuesday when this took place. Fitch downgrades the United States long-term ratings to AA plus from AAA. Now, to bring you on to our chart to show you where we were, for those of you who don't remember, that was back in July. July 27th was where we posted our highs. Fractionally after AI was invented back in April of 2023. And from that decline into August, into September, down into October, and down into the Israel invades Gaza, exactly the same price level as when Russia invaded Ukraine, right back there at 41.03. We had 3 red months in a row, and I'll show you over here on the charts where we had our 10% decline. So anyway, we are looking at a dip that's coming here, but the aggressiveness of that dip is what we do not know. So let's just go ahead and bring you onto the charts, because that will help to explain a little bit, and I'll scroll through these because I want to get to the cleaned version of a SPY. So I'm going to bring you back onto the spreadsheet real quick, because again, I've had a couple of questions and misunderstandings, and like I've shared here, the Fibonacci spiral, which you're going to have to go out and do your own research on understanding the Fibonacci spiral and how it works. But some people draw it on their charts. Other people put it in a spreadsheet like I have. And your Fibonacci spiral dates, the changes from when you start, are automatically calculated if you do it properly on a spreadsheet. So again, 89 trading sessions since our February 19th top is May 19th, which is Monday, where we are expecting a high to take place. Not this, it doesn't have to be a all-time high, but a high to take place. And there is slippage. Slippage meaning it doesn't actually occur on that specific date. Could be 1 day ahead, could be 3 days behind. But I will say that having looked over this and some of the people that do use it, as you start getting to these further out dates, which, I mean, come on, let's be fucking real. If I'm saying that, 59.15 and we go to 59.16, we're talking about 5,915 points. So being off 1 point, there's got to be a little bit of a fraction of, wiggle room, might as well. So as you get to these further out dates, yes, they become a lot more inaccurate because you're off by 12 days, you're off by 9 days, but they are still very accurate. And I've gone over as to what other people are looking at from different times that they've charted this, from tops, bottoms. Everything still lines up with your May 19th. So enough on that. I'll bring you onto the charts and get going with this, because everybody wants to see what we're at. So I have here, I don't have the SPX up because my SPX charts, I have more than enough detail on all the different ones that I have, and I didn't want to clean one up, so I went with a SPY. So starting here in February 19th for our highs, same date for the highs on SPY as they are on the SPX. -1 miss for the first dip, the first little low. Perfect for the high, the next date. The next Fibonacci spiral date was off by 1. The next Fibonacci spiral date was off by 1. The next Fibonacci spiral date was off by 1. The next Fibonacci spiral date, being here on March 25, was specifically to the date, to the T. Now, as you see when we come down here, the Fibonacci spiral is not telling you where the bottom is going to be. Not whatsoever, nothing at all. But giving, again, a little bit of wiggle room, being off by 3 days from where I've calculated this, you have a specific and clear bottom. This occurring here on April 21. I'll go back to my spreadsheet because I do not believe I updated this on Friday. This is April 15. So the message was off by 1 ... There he is, because it's off by 3. Because as you see here, April 15th was the holiday, if I believe. No, am I wrong? No. Yeah, April 15th is here, and then your gap's a couple days down, and boom. So anyway, that's the one that I'm going with. I could very easily just move this over here, and it would still be accurate. But again, I'm sticking with it because something similar to the full moons, I like this. And here we are going into our May 19th date. So anyway, gaps. Typically, in an impulsive bounce, which is due to be retraced, you have 3 different kinds of gaps. You have your breakaway gap, which that's exactly what we can call this right here. Your break up above on March 23, which I'd need to go back to my dates and reference as to what occurred on March 23. But there's your big break right there. Boom, your breakaway gap. Then you get your runaway gap. And if you recall, starting out here the very beginning of May, we gapped above the 50-day moving average, which had been coming down aggressively, and we were still looking for it, but still never being able to actually make contact with it. Then we plustered around for doing nothing over the course of the first week of May. First week, second week of May, nothing whatsoever. And then the China tariff deal announced last weekend, Sunday, the big breakup, and kaboom, your exhaustion gap, where we gapped above the 200-day moving average. So, again, being that what it is, a retracement of this first gap is the only expectation that I would be looking for and intending for. As you can see here, where we came down in March, if you just go ahead and draw your line across there, you're essentially looking at SPY 550. You're looking at the SPX 5500. That's the area where, like I shared with you, 5565, bears need that break. Bears need a break below that 5565, below this gap from back on April 23, where we broke above the 50-day moving average. This is what the bears would need in order to start taking control. Come on to a little bit too much detail for you because, again, I need to see everything because the only thing that matters is right here, where we are. Let me take these, remove these studies. Again, that's the only thing that matters for us when we're intraday trading. But for a wider point of view, you got to be able to see it all. And again, coming off of that 23 minutes below, minus 20%, back on April 7th, can see this very clean as a 1, 2, 3. Can see this very clean as an ABC. Can see coming off of this 2 or B bottom being a very clean ABC. Can see it very clean being a 1, 2, 3. Everything tops to the same place, the same location. Everything points to that being as to, okay, we have made it to our exhaustion level, and now it is time to see where do we dip. And like I've shared with you here, you've got your 5665, yes, but this being your breakaway gap over on the SPX, well, where is it? Over here, actually, down here at 5400. The breakdown below this 5,500 level is immediately what I would say, because that's your 10% from your all-time highs. So I wouldn't be looking for a drop down to 5,400, not by any means at all, but wider view, it has to be given a little bit of respect down there that it exists. It's still there. It's still alive. Come on to our May view. This is just looking at May, nothing but May. Start out the month, we do nothing. We killed it that first week. First day of May, the first week of May, which was last week, and then you get your big China gap, and here you are during OPEX. Boom, going nowhere, a little bit higher, and then boom, you have your Friday. And then what happened after Friday? Well, you saw your Fitch ratings came out, and what happened to be, your full moon window is completely closed. Closed, finished. 23.24% over the course of 4 weeks, 5 weeks, 6 weeks, however many weeks it's been since April the 7th. 30 trading sessions is what fits on your chart. But I bring you back to here, where again, what we're showing here is just the, zoom it on out. Right here is back in July, where we were short prior to this high, where the S&P topped out at 4607 with a new all-time, not a new all-time high, still below the all-time highs and right up to that old March high from back in 2022. And then Fitch downgrades the US. Boom, 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 down 11% over the course of 3 months. So don't have your expectations that you're getting a 10% drop in a week. This is a 3-month move to get a 10% drop, 10.92% down into where Israel invaded Gaza back on October 27th, which, again, for the record, we were getting long back 2-3 days prior to that bottom coming in, just like we were short 2-3 days prior to that top coming in back over here in July. Bring on to the QQQ, and again, the same thing. You can look over this as many different ways as you want, as many different angles as you want for a bullish or bearish wider view interpretation, and you are not going to get one. It's not going to show up. You've got a clean 1-2, very clean 3, just up here into this 132 area, 138.2. You come off your 2, you again have a very clean 1, 2, 3, very, very clean, and now looking for, okay, where does our wave 4, from a bullish point of view, where does our wave 4 dip to so that we can get one more wave to the upside for a wave 5 before we get a bigger correction, which will be from a higher high, so we will be coming down to essentially the same support area. Support has unchanged. 494, 471. That's the lower end over there on the QQQ. 494 has to be broken first, and then you have your 471 to save everybody's life if you do break down below that. You come over on your QQQ detailed, and again, it's a little bit too much detail for most people to be able to look at, but here you go. Here is your last 15 days, coming off the April 30th low, the gap up above the 50-day moving average, coming up, touching the 200-day moving average multiple times during the first honest week of May, the week that was last week, and then the big gap up above, boom. And like I've shared, there are no gaps above. There's no gaps whatsoever other than the one that we have created over the weekend because of the Moody's downgrade. Then you come over onto DIA, and as you can see, the SPX is up here. The QQQ is up here. Dow Jones, DIA ETF, we can't even get to the March highs from March 26th, the bounce. The B-wave bounce before the big drop. We still can't get there. We're a couple of points off of it still. And then you come to your IWM, which IWM, yes, you did get to take out that March 26 high by a couple of pennies, but you can't get anything up above it. And I'm not saying that you can't follow through, but once again, here we are. We were looking for it to get up into this 211, 213 area. Took a little bit longer than it should have. And here we are back up in the 200s. So retracement on the IWM as well is very significant, that it does not want to get breaking down below that 195. Actually doesn't want to break down below 198. But if you get that break below 196, you're in a lot of trouble. So again, that's what we're looking at. That's what we're here with. And just to give you a basic bottom standard, just a standard retracement right there. 481.81 and up to the highs, which were I don't remember what the highs were. If anybody does remember it, but I'm just going to go ahead and put 594 in there just to keep things clean. So we'd be looking at a drop down to around 567.52, which, if you recall, is right there where your resistance has been during the original month of May, right around that 5600 area. Bring you on to the SPX just to make sure that we've got that. Here we are, right around that 5600 area, 5665 area, where we continued to resist. We broke above it, but we always came back down to that 5665. Always. We always came back to 5665. So that's what it is here on the SPY. Would be a basic, standard, tiny little dip, nothing less. And then here you have over here on your second drop down being 38.2 retracement down to 551. The runaway gap, the 50-day moving average getting broken and bringing you right back here down to the March 13 lows, which would be the oh shit moment if we were to get a move down to that. So I'm going to bring you back over onto the spreadsheet real quick, just again to do some basic mathematics. And you've got 5958.62, right? I've got this in my, fuck it. We'll just go with the old-fashioned calculator, right? Yeah, so 5958.62. So a 5% drop, okay, would take you to 5661. That's a 5% drop. Go out and bring you back, because again, the wider view of things. You don't get 20% moves without a significant minus 5% correction. It doesn't happen. The question that you have is the velocity. The velocity, and what I mean by the velocity is how quickly can that dip take place. Here, your 11% dip after Fitch downgraded the U.S. took 3 months. Back over here in April, where we hit 28.29, it didn't even take a month. Took 2 weeks. 2 weeks, we were down 5.6%. Back over here in July 15th, where we topped out, a 14.46% bounce. Didn't take until the beginning of August. 2 weeks, 3 weeks, we're down 9.7%. So the velocity is of question, but as you can see very clearly, with this being 55.20, I'll move it up to 23. Nope, that's the wrong Fibonacci. I'm going to leave it alone. Your full moon is in. Your Fibonacci spiral is here. And now you have all of a sudden this downgrading and Trump bashing, and everything adds up for you. So I'll leave you off with a quick view of a couple of other things and let you get on with your weekend. Netflix. Unbelievable, man. Fucking unbelievable. Since April 25, you're closing up above 1100. You're coming down to 1100. Had that 1102 early in the week on Monday, Tuesday. But I now see 21 waves. 21 waves to the upside over here on Netflix, which, 1200. I have no idea what the significance of 1200 actually means, but again, I'd still be looking for Netflix to be coming down and closing below 1100, and more realistically coming down to 1033.65. Still doing it. Over here on Win. Know a lot of people are probably scared to have gotten into Win because you've never seen it. You got a little bit gun shy because of Boeing, and here we are. Win, dividend date is paid, everything's there. Like I said, the reasons and shared why I got into the trade. And here I am looking now at 89.90. 89.90 is the first spot that I'm looking to be broken, which also includes your China deal gap, which fills down here at, where are we? 87.97 would fill the gap over on that and start bringing us down into the 250-day moving average. Either way, the trade works. UNH, 187.72. 187.72, and again here with UNH, I need a tiny fraction of common sense to be used. As large as UNH used to be, how many banks do you think are exposed to the bonds that UNH has with those banks? How much do you think that those banks are eating because of that? Because again, the banks are still holding 1%, 2% treasury bills. But we're keeping everything fluffed because we're talking about AI so that nobody pays attention to any of that stuff. And then I leave you off here with Boeing, which I've actually got something quite interesting to show you on Boeing. Because, yeah, Boeing, you undoubtedly broke above my 188. You know, here it goes. Yep, 185.71. Oh, this is the place. This is definitely the place. And then, China. Well, got a lot of work to get done over here on Boeing, but it's quite interesting because you come over here and you see, going back in history, where you can look over all these Trump tweets. Back on December 6, 2016, about a month after he became president, Boeing is building a brand new 747 Air Force One for future presidents, but costs are out of control. More than $4 billion. Cancel order. And that's the thing is, you know, you can go and you can say things a long time ago, and then when you say them today, doesn't matter because it's a completely different atmosphere and people aren't going to remember what happened in the past. Unless you know how to use the internet for the way the internet was supposed to be used. So I'll leave you off with a little clip here. I hope you enjoyed our sponsor, Enron Egg. And again, with Boeing, I don't have a problem with it.
Saudi Arabia giving $25 million, Qatar, all of these countries. These are people that kill women and treat women horribly, and yet you take their money.
Not a gift to me, it's a gift to the Department of Defense, and you should know better.
Why don't you give back the money that you've taken from certain countries that treat certain groups of people so horribly?
You should be embarrassed asking that question. They're giving us a free jet. I could say, no, don't give us. I want to pay you $1 billion or $400 million or whatever it is. Or I could say, thank you very much.
Why don't you give back the money? I think it would be a great gesture.
I thought it was a beautiful gesture. Now, there are those that say we shouldn't be accepting gifts to the Defense Department. And I would say only a stupid person would say that.
It should have never happened. And I think you owe an explanation to the American people.
We're giving to everybody else. Why wouldn't I accept the gift?
If I ever said that, that's quid pro quo.